The Federal Reserve has cut interest rates by 25 basis points, bringing them to a range of 4.25 to 4.5%. Despite this cut, stocks tumbled as the Fed signaled fewer rate cuts in 2025 than previously anticipated. The Dow Jones Industrial Average experienced its longest losing streak in nearly 50 years, dropping about 2.6%. The S&P 500 fell roughly 3%, and the Nasdaq Composite slid more than 3.5%. The Fed revised its projections, anticipating higher core inflation and economic growth next year, coupled with a lower unemployment rate. Fed Chair Jerome Powell emphasized a cautious approach to future cuts due to these factors and the solid state of the economy and labor market. Cleveland Fed President Beth Hammack dissented against the rate cut, preferring to hold steady. This dissent, along with the revised projections, contributed to the market's negative reaction. Mega-cap tech stocks suffered significant losses. Tesla was down over 8%, while Amazon, Apple, and Microsoft fell over 4%, 2%, and 3% respectively. Meta, Alphabet, and Nvidia also experienced declines. The 10-year Treasury yield rose nearly 11 basis points to just under 4.5%. Rate-sensitive sectors like the Russell 2000 and real estate experienced significant sell-offs. Powell acknowledged difficulties in bringing inflation down to the 2% target, citing underperforming inflation expectations as a key factor. The Fed's updated projections show core inflation peaking at 2.5% next year before gradually cooling down. Powell discussed the incoming Trump administration's policies and the resulting policy uncertainty as a reason for inflation uncertainty and a more cautious approach to rate cuts. He used the analogy of walking into a dark room full of furniture to illustrate the need to move slowly amid uncertainty. Housing starts fell to a 4-month low in November primarily due to a drop in multifamily projects, while single-family construction starts rose. The outlook for builders remains uncertain due to high inventory levels of new homes. Despite recent stock declines, Nvidia shares rose following a report about its potential cloud services strategy to compete with hyperscalers. This move could generate significant revenue and solidify Nvidia's role in the AI landscape. Information attributed to Yahoo Finance and The Information.